I want to first of all get your perspective on the market. It's down 17 basis points today, just under 0.2%. Give us a sense of your thoughts on the trend we've seen over the last few sessions. We see the market is a bit bearish.
It's a pleasure to be here, Wole. With respect to market trends, what we've seen is profit taking amid strong performance over the last couple of months, and I think that's quite normal. I think we obviously need to put in context where we are today. We're up roughly about 15%. Compare that to where we were, at the end of the first quarter. We were barely, 2% higher, over the end of 2011. And obviously, you're putting this on the background of a weak global economy, and some concerns over government reforms, and also a very strong bond or fixed income market.
Well, I mean, you put it very clearly. The market has been up quite a bit over this last few weeks. So clearly there's some room for some profit taking there. But let's shift focus to some of the results coming out. We saw CCNN release numbers yesterday, and I want us to focus on the cement sector today. First of all, your thoughts on CCNN's performance. Is the fourth largest cement maker in Nigeria. Its profits are down significantly. What is the problem there?
We thought that the numbers were quite mixed. You saw quite a strong recovery in turnover, and quite indicative of strong volume growth as they gradually ramp up capacity. They're currently doing a bottlenecking process, which will see the capacity expand to about 700,000 tons from about 500,000 tons. So we're quite encouraged by that dynamic there. But what took us aback a bit was, a lot of the gains they saw on the manufacturing side, as gross margins, moved about 17% over the quarter. Obviously, didn't translate to the bottom line. You had quite an increase in tax charges during the period, and operating expenses were also significantly higher. Right. In there, you have much higher finance costs, but I think that there's still an unanswered, that unanswered increase there in operating expense, probably selling, distribution, admin expenses. But again, it's not really a cement player that we're excited about. It's the smallest cement player in the sector, and we're actually a lot more bullish on a lot of the bigger players. I mean, if you look at it from an operating margin standpoint, we expect it's likely to significantly lag peers over the medium to long term. We're looking at EBITDA margins of closer to about 10–15%.
All right, we'll talk margins a little bit, especially for the other players. But before that, your thoughts on the improvement in the power sector, and if there are any benefits for the cement players. I know quite a number of them are already generating their own power by themselves, but with power up to a record high, and we'll be speaking to the power minister later on the show, give us your thoughts on the impact this will have on cement players as a whole.
That's a good question you asked. Yes, there are obviously benefits, but we think that will be actually a lot more positive over the medium to long term. In the short term, it's net negative for the cement players. Why? Because the reason why, first of all, the reason why we're seeing quite an improvement in the power production in Nigeria at the moment, about 4,300 megawatts, compared to about less than 3,000 for most of this year, is because a lot of gas now has been channeled to a lot of the national independent power projects coming on stream. Right. Now, they've obviously taken off a lot of gas or gas supplies from existing cement producers who have now had to rely more on imported LPFO or locally sourced LPFO, which are obviously a lot more expensive. And that's why, relative to, I think, general market expectations, numbers have not been as significant or strong as we anticipated.
Well, net negative. I'm not sure many people have predicted that. But okay, let's talk margins now. And across the bigger players like Dangote and Lafarge, Wapco, Ashaka Cement, give us your thoughts. Just paint a picture for us. I know that cement used to be a very high margin business. Is that still the case? Because we've seen some pressures, inflation pressures across the board.
Well, it depends on how you look at it. Obviously, markets like Nigeria, where we produce oil, and you can source gas and some other distillates, much cheaper than what it costs in the average market. It is a relatively high margin business. Right. I'm not sure you say exactly the same in the US or Europe, but yes, in Nigeria that is the case. And you have players like Dangote Cement, Lafarge, who are able to get preferential pricing on gas. And if you take, for example, some of the locally produced LPFOs, those come at a discount to the quantities internationally. So those are the key driving factors for most cement players. And you know, as long as power or energy cost remains the most significant cost component for most cement producers, you know, I think Nigerian cement producers are likely likely to remain pretty strong as far as margins are concerned. We're likely to continue to see improvements over the medium term. The focus, I think, for most producers at this point is volume, but more in the medium to long term, I think efficiencies and raising you know, margins will be the key focus.
Okay, if you can, in 10 seconds, what are your best picks in the sector? We have Dangote Cement, we have Lafarge, Wapco, Ashaka, and of course, I know you don't like CCNN, so which one do you like?
Being the elephant in the room, Dangote, you know, is by default our most preferred pick. You know, we obviously see quite a lot of upside, you know, on the back of, you know, additional capacity adds, and I mean, today it's got a capacity of about 19.5 million tons.
Right.
So if you're obviously looking to medium to long term, I think it's the best play. But if you're looking to take a short to medium term play, we do reckon that, you know, Lafarge Wapco is the way to go. We're obviously seeing quite a lot of traction in earnings over the short term. In 2012, I think a lot of investors will respond pretty positively to that. You know, relative to our 2012 target prices, we do see an upside of 40% in the Lafarge Wapco versus the Dangote Cement, where we're looking for about 20% upside.
Right.